least I won't forget that. We are recording. Okay, let's get started. Okay, so what we'll be talking about, the talking points today, we're going to talk about why new traders fail. We're going to discuss what a risk management plan is and risk management strategies. We're going to discuss kind of how that applies to your trading, your everyday trading. And give me just a second. Separate this out. There we go. All right. So why new traders fail? This is kind of an important piece of information. If you've been trading for any given length of time, you probably heard the 90% of all day traders or retail traders, fail, blah, 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 blah. I'm not a huge fan of that saying or that statistic because what constitutes a trader and what constitutes failure? If if I have a successful year of trading and I decide I don't want to do it anymore, does that mean I failed? If I have a, say I'm trading for 5 years and year 1, 2, and 5 are profitable, years 3 and 4 are losing years. I'm not profitable those years. Does that mean I failed? I'm just not a fan of that statistic. I know a lot of people regurgitate that statistic all over the place. I just want to put it out there because it really comes down to do you want to trade, and for what is the fire that lights the trading light there? What's driving you to trade? Some people just want to be part-time traders. Some people want to be full-time, etc. So I don't want to focus on a statistic that doesn't really work. I just want to focus on what we can do to get this group up and running, everybody profitable. So a few other reasons, or here are the reasons why new traders fail. They don't give enough time to build a skill and perfect their craft. So for those of us with full-time jobs, or unless you're retired, if you had a full-time job, prior to your retirement, maybe you spent 10 to 40 years in your career. So during that course of time, you build a skill set, and you got better and learned different things that made you better at your job. Maybe you got promoted once, several times during that course of your career. So you gave your career 10 to 40 years of your life because they gave you, they paid you for it. And when you gave more of yourself and you improved your skill sets, maybe you got a degree that would give you a promotion. So you're investing time in yourself so you can be better at your career. For what? So you can get more money, I would assume, or maybe a different role that gives you certain flexibilities, leadership roles, management. So the point I'm trying to make is you invested time, years and years of your life to build skills and perfect your craft. But the majority of us are new to trading and we're failing because we're not giving ourselves enough time to build the skills. And we want instant gratification. We want profits now. And that's not really the best way to go about it. And that's one of the reasons why new traders fail. Another one would be lack of planning and execution. Um, how many out there have an actual trade plan that they use every day, that they look for setups? Or do you just kind of have a mental note of what it is? Or do you not have a trading plan at all? You just hope that there's a magic button out there, or somebody will tell you what strike to do or to buy or sell. If that's the case, that's not the best method. And that's another reason why new traders fail. You need a plan, and you need to learn how to execute that plan properly. Controlling emotions. And that ties in very heavily to risk management. Learning to, and I think Brian said at some point that you have to have the emotions of a robot, which kind of stuck with me, which is very true. You can't let a winning or a losing trade control your emotions. So you just have to, we'll discuss more in that later, but that's another reason where, big loss, and they just they don't know how to recover from that. And again, that's derives from poor risk management. They gamble instead of trade. And I'm going to go into like a mindset comparison on the next slide that explains that in more detail. And they do not, number one, this should be number one on the list. They do not incorporate a sound risk or money management plan or strategy. And that's why we're here today, is to learn how you can do that and some strategies that kind of apply, since we're all Nadex traders here, that apply to Nadex trading, not the trading traditional futures, although it could apply to that, but I'm obviously surrounded, or I have some strategies based on Nadex trading. So there are many reasons why new traders fail. Any questions there? No? Okay. All right. So let's look at a trader versus a gambler. And a lot of these, maybe some of these hit home with you guys. So we have the, let me get my handy dandy laser pointer here. All right, so you have the trader and the gambler. Okay, so strategy and trading plan. Okay, so a trader learns different strategies over the course of, they're investing in themselves. They're learning, charts, indicators, patterns, etc. So they're investing in themselves to come up with an effective strategy and trading plan. And they use that every single day. Where a gambler, or the gambler's mindset, just no strategy, bounces around the internet and tries things, or maybe they heard something from somebody, or somebody said, "Ooh, I'm buying," and they just kind of follow like a flock of sheep. Oh, it looks like it's reversing, and we do that in chat, and I know we're all kind of looking out for each other, but you should always be using your strategy to validate anything anybody said, even if you feel like they're more successful than you at trading. I've made mistakes. We all have. Even the professional traders, they have losing trades. It just happens. So yeah, it's great to have a community to bounce ideas off of, and I'm hoping that's what this is, and that's what you guys see it as. But we don't want you to just try things, especially when it involves your money. So make sure you're using a sound strategy and a plan, a tangible plan that you can see either on your screen or on a piece of paper. And I'll talk a little more about the plans and strategies later. A trading journal. Now this is one I'm still kind of guilty of. I'll do it, and then some days I won't do it because I'm busy. But if you really want to be successful in here, it really does pay off to kind of learn from your successes and failures by keeping a trading journal. And you could, what I do is usually I'll pull up my transaction history in Nadex for the day, and I'll just copy and paste those in an Excel spreadsheet, and then I add columns like just for notes, and maybe some additional columns, different additional fields, whether it was obviously you could tell by the settlement amount if it was a successful trade or not. Usually I'll highlight, my settlement line items green or red, depending on if I won the trade or got out, or I cut loss. So that would be kind of good, you can just copy and paste that information, put it in a spreadsheet, and add fields. So what was the issue? Why did you lose that trade? What was it about your entry? What was it about your exit? Did you not cut loss soon enough? Did you not take profit quick enough? These are things that you should really pay attention to and see if you're repeating patterns. So that's why it's important to have a journal. Like I said, it doesn't have to be a written journal. If you want, you can have the written journal. I like just being able to copy and paste all my trades from my Nadex history. Makes it a lot faster, and plus electronically I can look it up on my phone. I kind of use a cloud-based storage, so I can pull up these documents anywhere I am, anywhere I'm at. So, and I'd be happy to kind of post an example of what that looks like. So maybe tomorrow I'll kind of, or maybe even a quick video on how I pull that information from Nadex and just throw it in Excel, or you can use Google Docs, something like that. Because you should be looking back at the day. Okay, I know I've lost 3 trades, but why? Okay, well, I'm looking back at the chart. Okay, this wasn't a reversal. Why did I think this was a reversal? And then I waited too long to cut loss. I just let it, and I hoped that it would turn around instead of, oh, I'm using proper risk management and I'm going to cut loss now. So I can't stress enough how using a journal can be helpful for you. So trader versus a gambler when it comes to risk management, or true trader, okay? And I'm hoping you guys learn this, and we all learn this. You're focusing on controlling risk on every single trade. You're thinking more of risk than you are reward. You are protecting every single dollar. So that should be your focus. Where a gambler, it pays no attention to risk management. You just focus on the prize. So that's the absolute wrong mindset to take. When it comes to profit and loss, again, just reiterating my point, a trader will protect the capital he has in his account and calculates risk on every single trade. Okay, what's the probability that this will get to profit? And so you are thinking about that before you hit place order on that trade. You already know when you're getting in, when you're cutting loss, and when you're where your profit targets are. You should already know that before you go in. Where a gambler, we're just like, ooh, man, I think it's a trend reversal, and I can get this at the money. I'm going to throw 10 contracts on, and man, look at that, I can make $500. You're just focused on the green. And yeah, it's great to think about the potential profit, but ultimately you should be defensive minded. You should be protecting every one of those dollars instead of being offensive and aggressive. When it comes to trading execution, this is a big one. So the trader will be patient. Again, the word patient, and waits until a trading edge is present, or basically wait until there's a shadow, no shadow of a doubt that this is a good entry point. whether it's a reversal or it's a continuation of a trend. And they have their criteria for making that entry. Where a gambler kind of trades without an edge again. Oh, so-and-so said it's reversing right now, so I'm going to get in and I'm going to make money. Oh, well, it looks like it's going against me. Well, I mean, they said it was a reversal, so man, I hope it goes back up. And then you hope, and that red number gets bigger and bigger and bigger until you're at a full loss. And then it affects your mindset for the next trade. Then you're starting to second guess yourself. Should I enter this trade? Well, I know what happened to me before. As soon as I entered it, it seems like the world's against me every time I make a trade. Everything's telling me it's a reversal, and then it comes right back at me and takes away all my money. So that's where just learning how to execute your trade based on your trading strategy is vital. And we're not going to discuss, I'll discuss kind of some trading strategies as it pertains to risk management, but I'm not going into, reading a chart. That will be on our charting basics webinar. So sorry if that let you guys down, but this is first and foremost, you have to have proper risk management before you start laying down some real green. Emotions. A true trader, whether it's a win or a loss, it's just, okay, I won that trade, good, on to the next trade. Let's be patient and wait for the trade to come to me, right? I'm not going to just, well, that trade's over, I made money, I'm feeling good, let's keep this party going, and you know what, I'll just throw a trade on here. Well, that's a sure way to get your account, down to zero. So just don't get emotional about wins and losses. If you lost one, you move on. You wait for the setup. Be patient. Just because Johnny or Sally said the trend is reversing, or ooh, it should take off, or oh, it's 3:30, so it's gonna, I know it's gonna reverse, so I'm just gonna pull a trade right now. Be more patient and be more diligent before you throw hard-earned money down on a trade. Make sure it meets every one of your criteria, if you have any. So that's something we'll talk about in another webinar, is actually building a trading plan. What does that actually look like? We're a gambler. It's like, ooh, man, I put down 500 bucks at the money, got me 500. I got 100% on my money today. Man, I am feeling good. So the next day, or maybe in the afternoon, you think it's a reversal. You know what? I can't do any wrong. I'm gonna put down 20 contracts, and then there goes half of your account. So you just went from feeling awesome and on top of the world to feeling crappy, and you just wiped out 50% of your account. This is the reason why you need to incorporate risk management. It's just like Brian said, there are a lot of small trades, and we'll get into kind of that in a little bit, but losing 100 versus losing 1,000, definitely different feelings. So I can live with myself losing 100 bucks and moving on using my strategies, but if I got ahead of myself and laid down, 1,000 bucks, hoping to get 1,000 or another 500 or 1,200 or whatever, pie in the sky, it's a completely different feeling, especially if you only have an account of $2,000 and you just lost 50%. So you got to learn to control your emotions, and that gets a lot easier with proper risk management. All right, so a trader treats every trade, and they're trading as a business. So think of it that way. If you're opening a business, you would want to be proficient in everything that you were doing. If no, I mean, I could give an example, but I think you guys understand. I mean, you need to put everything you have into it. And what does a business do? They look at all their expenses. They see how they can cut costs. They see how they fine-tune their marketing. So you got to look at all aspects of your trading, not just, ooh, what indicator can I get that's going to, give me a high percentage of wins versus losses. And a gambler has an unrealistic profit target. They may have a $500 account. They're like, ooh, I'm going to double my account today. Ooh, by the end of this month, I'm going to have like 50 grand because I'm just going to double it and double it and double it. Even if I have a few losses in there, it's okay. It's like I'm pretty sound. Yeah, and you're going to be trading for about a day, maybe two, and then we're not going to see you again. So we don't want that. So any questions on kind of this comparison? I hope it kind of hits home on a couple of these little comparisons here. It should. So, all right. So, and I don't have a whole lot of content here, guys, but it's really just a quick lesson, but it's something. Thanks, Squeak. Yeah, I mean, they hit home for me too. So some of them, it's like, you could probably think of a bad trading day and be like, oh, makes me cringe. But so that's why it's important to kind of shape your mindset as a trader and get rid of those gambling tendencies. It'll get easier and easier if you incorporate risk management, believe me. All right, so risk management plan. So there are some pieces here, and then so let's just talk about this a little. So consistent strategy and trading plan. Okay, I say consistent because you may be using, so you guys who may have been doing this for months or maybe even a year or whatever, or however long, you may have some knowledge and you'd be like, okay, I understand charting a little bit now. I understand my indicators. I'm getting a little more patient with my entry points. But if you're not using proper risk management, your contracts and position sizing are all over the place. When you have a bad losing day, you're going to point to your strategy instead of yourself. Oh God, well, that strategy doesn't work. So what can I change? You start looking around and you start seeing there's so many things out there, guys, and it's really, yeah, it takes a lot of work to get good at learning how to, entry exit points, how to manage your trades, but you'll get better with each one. But if you're not consistent in the way you do things, and that means how you size your positions or keeping with the same strategy, and when I say strategy and then the trading plan, the strategy, it's kind of like, and I'm going to get into this on the next slide, but it's not just one strategy. When I say a strategy or trading plan, it's kind of like a tool set, right? So if you have a ranging market, if you have a flat market, if you have a volatile market, I would hope that you're incorporating different strategies, right? And different tools. Obviously, Nadex has binaries and spreads. You got OTM choices, ATM, IT, in the money. So you should be incorporating different techniques for different markets, right? So that's a strategy. So it's kind of a tool set, not just one tool that you use every single time for every single trade. So I hope that makes sense. Now this is the key, okay? And I'm going to talk into some variance on this. Okay, so before you say, well, so risk 1 to 2% of their account per trade. Okay, now you're probably thinking, well, I know what my account is, and I don't know what trade I can make with 1% of it. That's level of difficulty high, or maybe there's not even a strike available that will allow me to purchase at that price. So I'm going to talk about some variance in which you can get close to that. So kind of like small account strategies. So that'll be on the next slide. But if you have a $500 account or above, you should be able to incorporate this risk management strategy. So 1 to 2% of your account per trade. I'm sorry, it would that still wouldn't. But if you have a small account, obviously 1 to 2% might, it's probably not going to be possible. So I'll talk about that a little bit later. And then when you're making several trades, you shouldn't be risking more than 2 to 5% of your account per day. And what I mean by that doesn't mean if I have 5 winning trades in a row, I'm not saying, well, I risked 1% 5 times, and Mark said I shouldn't risk any more than 5%. Well, if they're all winning trades, I mean, you shouldn't. If you've lost up to 5% of your account, you should stop for the day and just start fresh tomorrow. Because with each loss, your mindset is going to be different, and it's going to affect you. Even with the small trades, obviously losing 25, 50 bucks versus 1,000, it comes with different feelings. But nonetheless, if you lose 50 bucks 5 times in a row, doesn't feel very good. Yep, exactly, Squeak. So it's important. So this is a guideline. If this isn't possible for your account size, then obviously you can increase the percentage. But really, I mean, you should have 10 trades, in your account, at least. So if you have a $250 account, you can get 10 to 20 trades out of that, and I'm going to show you how. So set profit targets. Again, you should have a plan before each trade. If you're buying, let's say you did everything met your criteria that the market is going up, and you're like, okay, I'm going to get an at the money binary, right where price is at, and obviously 100% of that would be, it goes to expiration. But what if you bought a $25 out of the money binary, but the market's still going up? So you have the potential there to get 4 times your money if it goes to expiration. But obviously there's a low probability of that happening, but you could double your money if it got up to 75. So you bought at 25, the value went up to 75, and maybe before the trend starts turning on you, you take profit. So there are a lot of different ways to get that 100% to 300% return on your investment, even for small trades. So set stop loss. Nadex doesn't have a stop loss. So what you could do is use your chart as kind of an area, or with spreads, that's a lot easier to do because it's based on points, where binaries, it's based on price, right? So if I bought at 50 and I say, well, at 20, if this goes down to 25, I'm going to cut loss, and that's usually what I do. Is you know, 50, if I lose 50%, I'm out. I don't want to lose any more than that. So you could kind of, you could draw a line on your chart as just kind of a reminder, but you don't know. The price is based on buyers and sellers. So typically, you know, you don't know where they're going to price that at $25. So, but you should have at least a plan in place that, hey, I bought this for, you know, $37. So I'm gonna, if it turns against me, I'll, you know, have a figure in mind. So I can't stress enough how important that is, because then we get stuck in the hope circle, right? It gets past that 50%. You're almost at a full loss. It's like, well, man, I hope this turns around. And you just see that number get bigger, and that red number get bigger and bigger. And it's happened to me too. And that's why I'm sticking to the 50%. Sometimes it turns against you fast, and especially when the market turns against you fast and you try to exit the trade, you'll hit place order, you know, you'll open up your position and it defaults to the opposite position you took, right? If you bought, it's going to default, and you open your ticket, it's going to default to sell. And you go to place order, well, price has already passed you by, so it might be sitting there in working orders. So it can be kind of a pain if it's really turning against you fast. So sometimes you can't get out at 50%. So that's why you just have to be cautious, and don't be hopeful. Just use your risk management techniques and get out of a loser trade. Don't stick with the loser. Okay? They rarely come back. So, and again, just to reiterate, keep a journal of your trades, whether it's a written journal or a spreadsheet, Google Docs, whatever. It really is important to have. It's like, okay, what bad habits do I keep repeating over and over? It's like, is it I'm not stopping loss, I'm not cutting loss soon enough, or is that I'm not taking profits before the market turns against me? So I got $36 green staring me in the face, and now I got negative 17. Why? Well, because you're greedy. You know, we always want that finish line, don't we? We always want to get to that finish line. So it's so important that if you see green, and remember, have a profit target in mind. If you're dealing with, if you have an account size that allows you to trade multiple contracts at once, so let's say you're doing 4, okay, and your trade's doing really well. Let's say you bought out of the money at $30, okay? It gets up to 50, or let's say it gets up to, you know, 60. Start offload half, and then see how far the other half takes you. So it's just, and that way, if it turns against you, you'll probably still end up profitable or at a break even. So if you can, if you're, you know, if you can do multiple contracts at once. So any questions in regards to this plan? I'm going to go, the next slide is, oh, I think the next slide, but any questions about this? Again, if your account size doesn't allow you to trade 1 to 2%, that is just a guideline. But with the league minimum at $250, you should be able to, I'm going to show you some strategies that you'll be able to get quite a few trades. You'll squeeze quite a few trades out of that that account. So it shouldn't be a problem. But any questions here before I advance? No? Okay. All right, just a trader comparison. So let's say we have a starting balance on both sides. Trader 1, let's say trader 1's on the left, trader 2's on the right. One uses a 2% per trade risk management. The other one uses 10%. They're a little more aggressive. Okay, so with 10 straight losses, okay, look at that. So only on the left here, let me get my handy dandy laser pointer, only $166 loss, only 16.6% of his account after 10 losers. Okay, you're trading 10% because you're swinging for the fences and you think you're going to be living large after a week. This is what happens after 10 losses. Suffer to 65%. And let's say you trade twice a day. This is 1 week. 1 week, you're down 65%. And I'm sure a lot of people even do more than 10% per trade. I know some of you have done that. Oh yeah, you know what? Oh, this is gonna ride up 150 points. I'm so safe here. I'm gonna put down 20 contracts. And then before you know it, half your account's gone, maybe even more. But not trader 1. He suffered 10 losses in a row, still in the game. There's still going to be a tomorrow for trader 1. There may not be for trader 2. A couple more trades and this guy's done. So, but if you're, guys, you could flip a coin. And I was starting to do this, and I was starting to build a quick video. I was going to make a webinar out of it, but if you flip it, I tried this. I tried it manually. I took a quarter over the weekend, and I flipped it 10 times, and I got heads 8 times. I'm like, okay, well, what does heads represent? Could be a loss, could be a win. So then I did it 100 times, and then it was roughly, I don't know, it was close to 50-50. So it kind of goes to show you, and it's going to be on the next slide too, is basically just obsessing about the entry points. And let me just go to the next slide. But does everybody understand this here? I mean, this paints a pretty clear picture. You will trade yourself out of the game if you keep trying to swing for the fences. And these are all losses. So sprinkle 50% wins in here. And oh, you know what? I did not put it on here. I'm sorry. Let me go back to my cursor here. So part of the risk management plan, or no, I did put it on here. Okay, so just because, like, if you got a guy who's swinging for the fences, and you got a guy or lady practicing proper risk management. So on one side, you got conservative, he's doing the right thing. On the other side, you know, he's got this guy swinging for the fences every single time. When you can be a successful trader and only have 4 out of 10 successful or profitable trades. The difference is, you know, using high probability for your trades and trying to get a higher ROI, right? That's what it comes out to. And then on the flip side, you know, if I'm getting 100, 150% ROI on my trades, my winning trades, and I'm only losing 50% on my losing trades, I can win or I can win 4 out of 10 and still be profitable at the end of the day. So it doesn't come down to, I could sit here and tell you, oh yeah, guys, I just posted, man, I was 9 for 10 today. Man, I'm awesome, 90%. Well, what if I did a bunch of, I'm doing a bunch of in the monies, trying to get 15 bucks, putting up 85. What does 90% mean if my one losing trade, or whether it's 9 and 1 or 8 and 2, my losing trades are eating all my profits. So that's why return on investment is so very important. And additionally, on the flip side, cutting your losers. Get rid of them. Okay? There have been a few times where I cut loss, and then they came back. I'm like, man, I should have hung on to it. No, I did the right thing. Okay? Because 9 times out of 10, these suckers aren't coming back. So just cut them loose. But does everybody understand that you should position your trades so you're getting at least 100% return? So, and then you should be cutting loss at 50%. So if I did an at the money, I bought at 50, I would cut it loose at negative. So if my P&L said negative 25, I'm getting rid of that sucker. But if it went to expiration, I got 50. I made 100% of my money. So, so you don't need to get down on yourselves if you lose a trade or 3. The important part is this: consistent. You are doing your strategy every single time. You are using the same position sizing every single time. You are practicing risk management every single time. Don't put your account at risk because you think that the Dow is going to go up 150 points today. Be prepared to manage your trade and don't hope. Hope will bring your account down to 0 fast. All right. So the risk management strategy. Okay. So again, I want to reiterate that trading plan is like a Swiss Army knife. You got strategies for different types of markets, for different instruments. Maybe you trade Forex, you trade commodities, you trade the indices, and maybe they're kind of different beasts, right? So you also ranging markets, flat markets, volatile markets. I have different strategies for those, and sometimes they work, sometimes they don't. But if you are just using the same position sizing every single time, you will still be playing in the game tomorrow. Trust me. So take high probability trades. So that one obviously is just building skill, learning how to read your charts, learning when it's completely overbought, oversold, learning how to read structure. Obviously that comes with, you can't just magically, see high probability trades. You have to put the work in. So hopefully over the course of time, with your investing in yourself, going out there, whether you're getting some books and things or watching videos, or hopefully our little group can help you with that as well. You're seeing trades very high probability, so maybe you are getting that 70%, and 70% practicing while you're practicing proper risk management, very good, very good. 60%, very good. If you're doing 90% while you're doing this, that means you're a rock star ninja, and we should probably be learning from you. So, but if you're doing proper position sizing every time, your account balance is going to increase. So, I know some of us want to swing for the fences because we want to double our account in the same day. Believe me, that $50 a day, $100 a day, remember, it's compounding. I don't know if you got all you guys on the saw the post I did with I think it's compounddaily.com. It's a compound interest calculator. It shows you the power of that. So you made $50 today. That means tomorrow 2% of your account is that much greater, because now you're dealing with, let's say you went 500 to 550. So you have a few winning days in a row, and now all of a sudden you're dealing with a $750 account. And reward yourself. Do you know, whether it's weekly, monthly, daily, say, hey, I'll leave 75% of my winnings today or this week in my trading account. I'm going to take the other 25% and I'm going to withdraw that. And that's going to be mine. So whether it's to pay bills or treat yourself or maybe invest it into another medium. Yeah, of course we want a massive Nadex account balance, but you should be rewarding yourself too. So if you have a successful week, you should take 25, 15% of that out. But keep compounding your balance, and pretty soon you'll be, if you're not 4 figures in your account, you'll get there, and if you're not 5 figures, you'll get there, and then you can deal with higher level of contracts, and those profits are going to get bigger and bigger, but you have to be consistent. If you're not consistent, it's not going to work. Again, stick to the recipe, okay? If I said, hey guys, yeah, here's this chocolate chip cookie recipe. Here you go. Here all you guys go. And let's say I said, hey, all you guys, let's bake this recipe. I want you to bake this recipe. We're all going to meet up and have a taste test. Do you think all those cookies would taste the same? No. So so there's two points I want to make with that. Okay. One is your recipe is your strategy. So don't blame your strategy. You may have a poor strategy that doesn't work, but if you're using proper risk management, really, like I said, okay, if you flipped a coin, if you went to at the money, nice, Brian. If you said, okay, I'm going to look at this market, I'm going to look at the at the money strike, I'm going to flip a coin, and that's going to determine whether I buy or sell. Do you think that if I incorporated the risk management strategy, that I would be profitable? So either it's going to go against me, in which I'm going to, once it gets to 50% loss, I'm going to cut it, or it's going to go up. And if it only goes up a little, I'll scalp it, or it's going to go to expiration. So, but the point is, I didn't change anything. I stuck to the recipe. Also, so that means the risk management recipe. If you're sticking to your risk management and you're constantly losing, then maybe your strategy needs retooling. Maybe you're not looking at the charts right and things like that. But you shouldn't blame your strategy just because you're all over the place with position sizing. And now you have, you have half of your account left. So just stick to the recipe, but incorporate risk management, okay? If you think you have a good bead on when there are reversals or what to do with different markets, stick to that, and keep learning, but incorporate risk management. Don't obsess with the entry point. I do this. I obsess with it. Who doesn't love that perfect reversal? You get in right when it reverses. It is a great feeling. It is like, man, this thing just took off. I'm right at the bottom of it. Soon as it turned the corner, I was right there. It's a great feeling. I'm not going to lie. Don't obsess. Just get in using your criteria. If you know it's going up, get in and then manage your trade. I bet a lot of us were probably sitting there and kicking ourselves. Man, I waited too long because I just wanted the best entry point ever. The entry point is the least of your concerns. It's really, once you're in, are you managing your trade appropriately using risk management? When it went up and you had profit, did you take profit? Okay, unless you're deep, deep, deep in the money, you should be taking profit. So if you see a green number, that's money for you. It's ready to go. It's ready to be taken off the table. Just take it. Okay? And then if it's turning against you, put hope to the side. Get rid of it. Okay? Save it for a place where it serves. In trading, it doesn't serve well there. So if it's turning against you, get out of your trade. All right, so small account strategies. And again, I put this one last, but really should be above this before I start talking about small account strategies. All of this, if you're not successful in demo, and by successful, I mean you're kicking butt for a month. You're seeing, a month or 2 or 3. Yeah, it stinks. It's like, well, I want to trade now. That goes back to, again, you need to invest in yourself. Okay? Do you think I want you piloting my private plane? If you're not you haven't gone through school, you're not certified, you don't have a crap load, thousands of flight hours under your belt. You think I want you flying me around? No. So if you came up to me and said, "Hey, if you give me $10,000, I'll trade it for you, and I'll take a commission out of it." Okay, what do you think I'm going to say at that? Show me your history. I want to see how profitable you've been over the time you've been trading. Well, I had this pretty good trade and demo, but ever since I switched to live, I haven't made money. I haven't had a profitable month. Okay, then my answer is no. I'm not going to give you any money. So why would you trade your hard-earned dollars if you haven't made the monopoly money yet? And I don't mean I put down 100 contracts and I won. I mean incorporating your strategies just like you would in live and doing it for a month or two. Were you profitable every single week and every month? If the answer is no, then you shouldn't be trading in live. It stinks to hear, but if you're not profitable in demo, you shouldn't be trading in live. You're just throwing money away. But that's why we're learning, and it shouldn't, we're doing a marathon here, right? Because we're talking about our money, which should be disposable income. That means you're not, I got bills to pay. I'm going to take my paycheck and I'm going to double it with this trade. I hope we all understand that this should be surplus income, that if we lost it, yeah, it would suck, but it's not going to affect, paying our bills. So, so any questions before I, talk just a little bit about small account strategies? Okay, because I said even with the $250 account, you should be able to squeeze a fair amount of trades. So I'm going to talk briefly on, how you would do that, but I mean it's not anything in depth, but hopefully it paints a picture for you. And I think that was the last. Yeah, that was the last slide. So okay, so here's a little demo account action. Let's see. not a whole lot of strikes there. Which one am I on? 3AM. All right, so we have a fair amount of strikes here. So we've done our chart analysis, and we know Jamal's asking, is it better to use Heikin Ashi bars or candlesticks? It's really preference at that point. And I don't want to get into too much on the charting, Jamal, because we're going to, I know we have a few webinars kind of queued up. One of them is charting basics, and we'd be happy to kind of answer all those types of questions. But really, that's kind of preference-based. Whether you, and mine as well, I use Heikin Ashi as well. Yeah, we'll definitely discuss kind of charting basics in that webinar and indicators and things like that. I apologize that, not going more in depth than that now, but I just wanted to stick to risk management because it is the most important piece of your trading strategy. If you're not exercising risk management, candlesticks or Renko or Heikin Ashi, it won't matter one bit. So let's say I've done my chart analysis and I believe, excuse me, I believe the market's going up. I have a $250 account, and it's like, man, okay, well, I know the account's going, I know the chart's moving up, so I'm going to take this one. It's right at the money. Right now, the price is at 109, 120, and this is 109.20, so it's right at the money, so I anticipate this to go up. So I'm going to buy that. So, well, that is, that's a large chunk of your account. So although, it may be a good trade, you got to think about what type of risk am I putting up right now with this trade. So, I mean, that's what, 1/5? 1/5 of your account in one trade. So, so that's risky. That's risky. So now you can choose an out of the money binary. So let's say if I knew the market was moving up, I'm going to choose this guy, 975. Now, why would I choose that? The probability of this expiring, super low. Okay? But again, what was the key word there? Expiring. All right? You're not thinking like a trader. You're thinking of that darn finish line. So all I want this to do is increase in value. Okay? If the market goes up, this 975 or 10 bucks, it might increase to 20 or 25 bucks. Okay? And if it goes against me and I'm using my risk management, I'll cut this loss at 5 bucks, right? At -5. But if this goes up from 10 to 25, there's my 150% on return. I just take profit like a boss, and now I'm profitable for that trade. Okay, I got 25 extra bucks in my account, less, the fees. And now you just rinse and repeat, right? It's trade small and trade a lot. You're just, that's why we do it. If it went against me, okay, say I made this trade 20 times and I made 25 on half of them, and on the other half, I lost 5 per trade. Logan asks, when you buy a $10 binary, it's automatically -5. Yeah, so I'm going to go over this in Nadex Basics, but I have no problem going over it now because it's an easy one to answer. So when you buy at the price it's currently being offered at, right now it's 10. The value of it is whatever people are selling it at. Right now, people are selling it at 325. So yeah, so when I buy this, its value will be reduced to 325, and when the value of this binary goes from 325 to 10, I'm at a break even. Okay, if it goes from 325 to 25, then I've made my my 15 bucks. Okay. So Brian said, yeah, always use a limit order. So let's say, price is fluctuating. So I could say, well, I don't want this for 10. I'll take it, for 5 or 6 or whatever. So when I do that, okay, because remember, price is fluctuating. Now, if it's taking off, okay, so if price is taking off in the upward direction, then if I put a limit order in, it's probably not going to get filled. So, but if I do it right now where it's kind of going back and forth, but your charts are telling you, hey, this thing's probably going to turn around any minute. So if I say, hey, I want a price of 6 and quantity 1, so let's just do that real quick. Okay, so that's going to do a working order here. All right, so when I open that, look, there's my one contract. So if somebody wanted to sell, they could sell this for my $6. And if they do, then it filled my order. Hold on, I'm trying to catch up to the chats here. Trade on the daily, mainly because we have time to do more analysis. If you put a limit in higher, then buy it auto corrects. Lower than sell the same. So you could put in, yeah, I've seen people make mistakes and they put in the value that they probably didn't intend on putting in, or maybe they just didn't understand. Yeah, if you see the sell side higher than the buy side, remember these are people putting these orders in. So they may not just, they just may not understand. So if you see like 12 on the buy side, like, well, if I sold that, yeah, then it would basically give me instant value. So when you have a lot of liquidity, when you have a lot of volume, you may see that gap a little closer. Not much. Usually it's about $5 differential. I think on some Japanese markets it's 10. But again, these are low or small account strategies. Remember, you just either want on the buy side, if I know the market's going up, I can, like right now, yeah, that's my order, but let's just say it was 6 and 10.25. So if I bought this at 10, its value would be 6. I would have to wait for it to surpass 10 to be profitable. So hopefully everybody understands that as part of Nadex basics when it comes to placing orders and understanding the bids and offers. So, and then on the sell side, again, say, oh, I think the market's going to go down. This guy's only like 15 bucks, because remember, this is my profit on the sell side. This is my my risk on the buy side. So if I click sell and I buy 1, you see my risk, my max loss 15. So that's doable on a small account. So I just need this to increase in value. So that's a good way to build your account up fast. Instead of taking, oh, well, I only have 250 bucks in my account, and I'm going to take this in the money, but if I lose, man, that's a big chunk of my account. That means I got 3 trades in me or 4 trades versus 10 or 20. What I mean is if the sell is at 10 and you put in 5, you would get it for 10. Correct. That is true. If there's a better price, it will offer up a better price. It will give you the best price. That is true. So does everybody understand the kind of, it's like, well, I got a small account and I usually do in the money because of their higher probability, but if you lose a couple, it'll wipe out your account. All right, so that's a quick way. I mean, spreads for a small account are kind of expensive, and if you don't know how to use them, it's just a waste of money. So, but yeah, I think we have, Brian, probably a Nadex Basics is probably the next webinar we should hold, because I'd love to go over just how to get in and out of trades and understanding each side and how to do the math real quick and understanding the products, the binary, just a basic understanding of binaries and spreads and all the markets. I think a quick Nadex Basics tutorial would be good. But to recap, so that is an easy way to build your account up. You don't need what do you say here, Squeak? When using an OTM like that, let everyone know that it's a scalp trade. Yes, exactly. So these are out of the money. That means when you're choosing these little $10 guys here, these are out of the money. And if you don't know what that means, then you should definitely do Nadex Basics training. And I look on the Facebook page. Brian posted the new members kind of a checklist and videos on there for Nadex Basics. These are exactly it, Squeak. These are scalp trades, just like you said. So the probability, they say it like this, that basically if you're buying for 10 bucks, they say that, okay, that's roughly means you have a 10% chance of that going to expiration. Not very high. But if you know the market's going to go up for a small given period, whether it's 30 minutes, 15 minutes, an hour, you could probably increase this in value pretty quickly and get out of the trade. Okay? You're not looking for this to go the full Monty here and get that 89 bucks. Okay? Chances are that's not going to happen. So, but you could easily double your money using this strategy. And if you lose, and if you're practicing good risk management, out of this 10 bucks, you're only losing 5. So you should only be, if it turns against you, you should only be, you should be cutting loss at a negative 50%. What was I going to say? So yeah, so once you get your account to a healthy size, then you could start using, oh, that's the point I wanted to make. So because these are out of the money, they are going to increase in value slower than ones that are in the money, okay? So an in the money and out of the money just means either the statement's true or false. If I'm saying I'm buying this, then I am saying that the current price, which is 109.094, is going to be above 110.20, which is the strike price. Well, that's probably not going to happen. It may, but probably not going to happen. So That's why we scalp. That means we have it increase in value, and then we exit the trade profitable. That's all scalping is. So scalping should be basically you should only ride it to expiration if you're deep, deep, deep in the money. That means, price has moved away from your strike in a good way. If it went past it on a buy and went up, 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 then, and you got a 50 point, 75 point, 100 point cushion, then that's okay. But if you, like, say if you're trading the Dow or the Wall Street 30, and you got a 5-point cushion, that thing can easily turn around on you. If you got a quick 20 bucks staring in the face, just take it. Okay, that's profit for you. Build your account, and you trade another day. So, any questions there, guys? I know it was kind of a brief strategy. I'd like to go into that in a little more depth, but it's a quick message, and I don't think it needs a lot of depth. It's just make sure that you have a plan. Make sure that you're using that plan to find high probability trades. Don't rush in the trade just because you're bored or whatever. Stick to the recipe and don't obsess and sit there and be like, oh man, I'm going to stay up. I'm going to find that perfect entry point. Yeah, it's a great feeling. And if you happen to be up while it does it, all the better. But don't kill yourself over a stupid entry point. Just get in. If you see the market's going up, get in and manage your trade. I'm not saying to just, ride it. Obviously, let it meet your criteria first. But if you're not using the proper risk strategy, you're going to look like this guy on the right who's swinging for the fences every single time. And then I can't stress it enough to make sure you're cutting loss, guys. Okay? Don't watch those losers steal all your money. Okay? And then look for those high probability and a good return on investment. So have an idea of what your profit, what you're looking for profit-wise. Don't say, oh, well, my profit target's expiration. No. If it expires, great, but you should have a goal. So if you reach target 1, that's good. Okay. If it continues, it keeps going, great. But if you see green, take green, guys. So any questions? I'm trying to think like where delivery. Exactly. Yeah, you see that green. See that green on the table. Take it. That's your tip. So take your tips and trade and keep on trading. So any questions before we cut out here? Be happy to answer any questions you guys have in regards to risk management. Thanks, Squeak. All right, guys. Well, I'll let you guys go. Feel free to, thanks, Jamal. Feel free to hit me and Brian up in the chat room or PM us. But guys, yeah, I can't stress this enough. Start this tomorrow, okay? Don't wait. All right. Well, you guys have a good night's sleep. Hopefully you guys aren't staying up. I'm sorry, hold on. You guys are chatting. Are you going to post or share that? Yeah, Jamal, I recorded this, so I will post it probably tomorrow. So, all right, guys. Well, have a good one, and I'll see you tomorrow in the chat room.